QuickBooks Pro Plus Desktop 2022 OneNote Presentation Pay Employees Form. Let's get into it with Intuit's QuickBooks Pro Plus Desktop 2022. If you have access to OneNote, would like to follow along, not required to, but if would like to, icon left-hand side, topic introductions, 1520 Pay Employees Form. Also note, when using OneNote, take a look at the Immersive Reader tool, topic introductions. They're also in the text area, same name, same number, but with transcripts that can be translated into multiple different languages and either listened to or read in them. They also have the same name and number as a presentation, topic introductions, designed to give an introduction to the topic, provide screenshots, links when applicable, and some accounting background to complement the information we'll go over in QuickBooks. If you're looking at the presentations, you don't have QuickBooks open or available, you can use the screenshots to follow along with them as well. Closing the icon, we're looking into the Pay Employees. We're on the home page. We're in the Employees section on down below, noting that in order to see this arrow on the home page, you have to either have the paid version of the payroll or you have to have the manual version of the payroll so you can practice with it. We're looking into the Pay Employees area. If you select that item, you'll go into the Pay Employees item here. You can also find this by going into the Employees Center, going from the Employees tab to the Payroll tab. You can then process the payroll from here if you have payroll turned on, which would look something like this. And this would give you your information, which hopefully is already populated for much of the difficult components including how often you pay, bi-weekly, weekly, semi-monthly, and so on. And then you can populate the dates of the paycheck and the pay period end, have your 3 employees, and then you can go into those employees to see the detail about a particular employee for that particular paycheck, which would give you the amount for the pay for that employee, summarizing the gross amount of the pay and the deductions, including any kind of benefits, federal withholdings, Social Security, Medicare, and the employer half or portion of those items as well. Noting that if you go to the balance sheet, this will be decreasing, of course, the checking account because it will be making a payment from the checking account, but that will be for the net check. This is the transaction detail in the checking account, so you can see the paychecks going out here, which are going to be down here, are some examples of the paychecks. On the P&L, you're going to see the gross pay, and then you might break out the taxes in a few different ways. So you could break out the payroll in a few different ways, but at the least, you'd have one payroll expense account and likely at least a payroll expense and a payroll taxes account. You can look at the transaction detail for the payroll liabilities account. This is for the federal withholdings. This is for the payroll liabilities of FICA. These are balance sheet accounts. And then we have the profit and loss, looking now at the payroll taxes down below. And you can zoom into the payroll taxes as well. Now we're going to get into the accounting side of it and just think about the journal entries behind this transaction, hopefully giving a background understanding from an accounting standpoint, noting that the accounting of payroll is one of the more complex components. One, because the withholdings add a level of complication, and two, because you have to do this both in terms of an employee by employee basis as well as an aggregate basis, and three, you also have not only accounting information you got to deal with regards to payroll, but also reporting issues and basically human resources kind of stuff that are kind of wound in with payroll as well, that need to be taken care of. So if we think about the payroll just in general, and let's imagine we're going to calculate the payroll and see what's behind the payroll. This would be kind of going into the setup process of payroll, which we'll do in the second half of the course when we start a new company file. But just in general, just to get a general idea of this, we'd say, okay, we can think about 2 employees. We're going to think about 2 employees. And let's say the first employee earns $60,000 a year. They earn $60,000 a year. And let's just say we pay them monthly to make it nice and easy. That means we're going to pay them $5,000 per time frame. But we're not going to give them that full $5,000, even though they earned that full $5,000. What we're going to do is give them the net check of this, in this case, the $3,693. Now, in theory, that does not mean that they didn't earn the $5,000. They still earned the $5,000, but we took some of their money and we paid it to other people on their behalf And part of that was because we were forced to do so by the government for taxes, and part of it might be voluntary for things like benefits that would be the choice of the employee for us to do that for them, which might be things like health insurance or a 401k plan. So we're going to just look at an example of the federal taxes now. Note there could be state taxes if you're talking about the United States as well that could be included too, but those will change from a state by state. So we'll just look at the federal taxes because they're kind of more uniform over the country. We have the FIT tax, the federal income tax. The federal income tax is not the federal income tax we're talking about for us, the employer. These are the employees' federal income taxes that they're going to report on their 1040 at the end of the year. We're required to take money and pay it on their behalf to the government. How do we know how much federal income tax to be taking out? We have to have a bunch of charts that we're going to use, but we're going to need the information like marital status and so on that we will get from the W-4 that has been provided for us. So as the employer, we're required to withhold based on the information given to us by the employee on their W-4, and that will have this complex structure of the progressive tax system, and we're just going to withhold whatever they tell us to withhold based on those rules, and then it'll wash out. Everything will kind of fix itself out when we report that information to them on the W-2. They use that W-2 to make their 1040, and then they determine whether or not they withheld too much or too little by getting a refund or paying money at that time. The Social Security is a little bit more clear because it's more of a flat tax at that point, although there's a cap on it and complications to it. But generally, that's going to be something that we can calculate more exactly. 5,000 times 0.062. This is just the employee portion. So that rate might change, but at least it's more easy to calculate for the most part. And then we've got the second is Medicare, so 5,000, also flatter tax, with some exceptions, but usually a lot easier to calculate than the FIT. 5,000 times 0.0145, 1.45%, about $73. And then the benefits would be dependent on the benefits that we have, whether that be health insurance, 401k plan, based on the agreements that we make with the employee on a voluntary basis instead of a forced basis as the taxes are. So that means that they earned the 5,000 minus the 750 minus the 310 minus the 3073 minus the benefits 175. They get actual check of the 3,693. If we did the same thing for employee 2, let's say employee 2 earned 75,000 for the year divided by 12, we're going to be paying them 6,250 on a monthly basis. The FIT would be dependent then on the W-4 they give us. We're just going to deduct whatever we're required to deduct based on the information they provide to us and the pay that we have agreed upon. And then we can calculate the Social Security, usually a little bit easier, 6,250 times 0.062. That's going to be the 388 about. The Medicare then, more of a flat tax, 6,250 times 0.0145, about 91. Benefits would be based on our agreement that we made on a voluntary basis as opposed to a compelled basis with the taxes. Then we got the 6,250 minus the FIT 938 minus the Social Security 388 minus the Medicare 91 minus the benefits 219 gives us the net check that they would actually receive, the 4,616 about. There's a rounding error, I think, going on here. But in any case, about 4,616. So you can see any one of these calculations is not too difficult in and of itself. But you can see that this adds up quickly, even only with 2 employees. And we would have to do it not only on a paycheck by paycheck basis, but on an aggregate basis as well. We also have more complicating factors, including the fact that there's a cap on Social Security. Funny things happen when Medicare gets over a certain amount as well that we have to take into consideration, and we have other taxes that would be thrown into the mix here, including state taxes, and then we'll get into the employer taxes as well. So then if we added these up, we can kind of think about this as if we had one employee when we think about what's going to be the impact on the end financial statements. In other words, if I add up the gross pay, we're at the 11,250 of the 2 employees, FIT 1,688 of the 2 employees, Social Security is at the 698, and note that because Social Security is more of a flat tax, we're more likely to be able to do something like this, 11,250 total times the 0.062, and we get to basically the end number. You can't do that all the way across because there could be a cap, and they're making that more complicated too with the changes to the law, but that's kind of nice that you can give that double check to some degree at least. And then here we have the same thing because it's more of a flat tax. I could take the total number 11,250 times the 0.0145 to get the total here. You can't do that with the FIT because it's way too complicated and we're dependent on other factors to do that. So it is what it is. Whatever we had to deduct, we deducted. And then we've got the benefits here, and then the net check. You can think about the net check in total, meaning you can kind of think about this like it was one employee for all employees that earned 11,250 minus FIT in total 1688 minus Social Security in total 698 minus Medicare in total 163 minus benefits in total 394 to get the net check of the 8308 in total. So when we record this into the system, there's two ways you can kind of do it. If you were to do this, say, in QuickBooks, meaning record the payroll through QuickBooks, paying payroll to do that, it would record the transactions for each employee because I would need the information for each employee to be printing it on their pay stubs and to be filling out the quarterly tax returns, the 941s, the yearly 940, the W-3 at the end of the year, and of course all the W-2s as well. Or we might have this stuff done, say, by a third party outside of QuickBooks, by something like an ADP or a Paychecks, and they have all the added information possibly, and then we might enter it into our system, just trying to get the financial statements to be correct, possibly thinking about them as like one employee, entering the data into the gross pay, the FIT, and so on, as if they were aggregated together, noting that we have to be careful when we do that because that means we'll enter the amount into the checking account as one lump sum, 8,308, and when we reconcile, we'll actually have a bunch of checks that came out of our checking account that will hopefully add up to that amount, but they're actually going to be in the checking account in multiple different checks. So when we reconcile, we'll have to deal with that in the reconciliation process and make sure that we are aware of that to make the reconciliation as easy as possible. Then we've got the employer taxes, which will say that employer taxes includes our portion of Social Security and our portion of Medicare for employee 1, our portion of Social Security and Medicare for employee 2. There's also federal unemployment tax on the federal side, and then state taxes, which could vary from state to state, but we'll just concentrate on these two because the federal unemployment tax is usually a lot smaller, a little bit less significant, and we just want to get the general idea here. We don't have any federal side of federal income tax. That doesn't mean we as the business don't pay federal income tax. That means we pay federal income tax on our income. These are taxes that we're paying not on our income, but on the income that we paid to the employee. They're charging us taxes on the income that we paid to the employee, right? And so that's going to be these taxes. And then if we add those up, that comes out to the 698 and the 163, which we can again think of those as like the aggregate taxes of the two employees. And then if I was to add up what's going to happen to the liabilities for this, we're going to say the liabilities are increasing now. The 1688 for the FIT, that's only an employee tax that we withheld from them, and we have not yet paid it to the government. Therefore, it's on the books as a liability until we pay it to the government. And then we've got the Social Security, which would be the 698 plus the 698 would be the 1395. And then the Medicare would be the 163 plus the 163 for the 326. And then the benefits would simply be what we withheld from the employee paycheck, the 394. If we add those up, we have total liabilities of the 3803 resulting from this payroll for taxes we either incurred or took from the employee, as well as benefits that we need to pay to somebody, mainly the government, and as well as the benefits like insurance company for health insurance in the future. Okay, so what will the journal entry look like? We're going to say the payroll expenses are going to go up by the 11,250. That's going to be the amount on the income statement. That's for the gross pay. That's for what they earned. Notice that that number has in it the federal income tax, the Social Security, the Medicare, and the benefits that they earned, not broken out as payroll expenses, but in their income for the gross wages, because even though those are taxes, they're not our taxes. They're not our responsibilities. We're just paying those taxes on the employee's behalf. Therefore, they're not going to be broken out, those taxes, in another account called payroll taxes. On the expense side, they're just going to be in the payroll expense, like the wages that they earned. Then we're going to have to credit. We can think about crediting the net check. That's what's actually going to come out of the checking account. If we think about it in aggregate, that would be the $8,308 after the withholdings, noting that that amount is aggregate of all the checks, including in this case the 2 checks. When we reconcile, we'll actually see 2 checks in the checking account that should add up to that $8,308. The difference then being the payroll liabilities, which we might break out into different categories like FIT, Social Security, Medicare, and benefits. But in general, we can think of a liability that has increased due to the payroll for in this case, just the withholdings thus far that we owe to somebody, including the federal government for FIT, Social Security, and Medicare, and whatever the benefits are, which we would probably break out into another liability account for like health insurance or the 401k benefit program or something like that, which would increase there. And then on the second journal entry, we're going to have the payroll taxes expense. The payroll taxes expense does not include the taxes of the employees, because that was already included in their wages, even though we're paying their taxes because they paid it. That only includes our portion of the payroll taxes, which is going to be our portion of Social Security and Medicare, and would include on the federal side federal unemployment tax, but we're not going to deal with that at this point. So that increased the $861, and that incurs a liability as well. So this is hitting the same liability account. The liability account now increasing by both the amount from the employees that we took from the employees and now we owe on their behalf, which that was for the 2942, plus our portion of the 861 that we're going to have to pay that are our taxes over and above. There's the 3,803, the 3,803 here. Let's go ahead and post it out and see what happens. We got the payroll expense 11,200, so that's down here. Payroll expense, we have the 8,000 goes up by the 11,250 to the 19,250. That of course increases the expenses, which would decrease then the net income. The other side of that is going to the payroll. Let's think of it out going to the checking account. The checking account's only going down by that 8,308, the net check. So 100,000 decreasing the 8,308 to the 91,692. The difference between those two being the payroll liabilities, which we might break out into different accounts, but we're just going to add them in one account. That account meaning we owe those things in the future. That's why they're a liability until we pay them in the future, including federal income tax to the federal government on the employee's behalf, Social Security and Medicare on both the employee and employer behalf, and then the benefits that are going to like an insurance company or to the 401k plan or something like that. And then we've got the payroll taxes expense down below, increasing the expense down here by the 861. Be careful of these two accounts. People get these two mixed up quite often because they think that in this payroll tax account, it should include the taxes that are the employee taxes, because those are taxes too, but they're not taxes to us in theory as the business. Those are taxes to the employee. We're being forced as the business just to be the collection man. We're the tax man. They made us the tax man. So we had to do it. We had to collect on their behalf, but they're not really our taxes. These are our taxes that we have to pay not on our net income, but for some reason on the employee's net income, we have to pay taxes on their net income that we paid them of that 861. So that means the net impact on the net income, we had income of the 200,000 minus the expenses comes out to the 24,710 beginning. It changed, went down by the 12,111 for the payroll taxes and payroll expenses down to the net income of 12,599. And then the payroll liabilities also went up by that same amount, which I probably should have mentioned last time. This liability and that liability are included in this number to get to that 3,803. Let's see it in detail with the GL. Payroll goes up. The payroll expense goes up from 8,000 by that 11,250, the full amount of the wages gross to the 19,250. The payroll liabilities went from 0 up by 2,942 for the employee portion that we took from them, and by the 861, the employer portion, getting us to that 8,308 on the GL. The income, or the checking account went from 100,000 down by the 8,308. The net checks, of which there are two, and two would show up on the bank statement, which we would have to make sure that we can reconcile to our books, even though if we only recorded it as one, here we can do. And then the payroll taxes going from 0 up by the 861 to the 861.